Good afternoon, everyone. My name is Zach Green. I'm the Content Marketing Specialist at Turnkey Technologies, and I'd like to thank you for joining us today for our webinar on 2021 tax changes. Just a little background on Turnkey. We are a Microsoft Dynamics partner offering service and support for Microsoft Dynamics ERP and customer engagement solutions. Turnkey works with a wide array of partners who offer solutions that extend the capabilities of Microsoft Dynamics, such as today's guest, Avalara. If you have any questions about today's webinar or anything related to Microsoft Dynamics, I encourage you to reach out at info@turnkeytech.com. With that said, I'll hand it off to our team at Avalara.
Awesome. Thanks so much, Zach. Really appreciate that. Hey, everyone. I'm Karen Brudvig. I'm the Strategic Alliance Manager with Avalara and work closely with the Turnkey team. So I'll be presenting part of this with you today along with my colleague Derek Warren, who's the sales executive. He's been with Avalara for about 2 years. And if you have any questions, anything like that, please feel free to throw those in the chat, and then we'll answer those at the end. So for our agenda today, we're really going to walk through the impact of COVID-19, 7 ways that the states are going to be increasing tax revenue or potentially in 2021. Derek's going to be walking through some sales tax changes as well as industry impact, and then technology and sales tax, and then finally we'll have Q&A at the end. All right, so getting started here. So I know we're all kind of tired of hearing about, all the changes with COVID-19, but COVID-19 has really changed everything from our daily lives with working remotely, kids learning from home, borders, being closed, basically halting international travel, to our shopping habits. With tax revenue for states, it had already been on a roller coaster ride from the Supreme Court's 2018 South Dakota versus Wayfair decision and Economic Nexus, which I'm sure a lot of you have felt in 2018 and then into 2019, and then boom, 2020 decided to hit us and throw this huge curveball. So we had every company. Oh, do you want to just go back there, Derek? So we've seen every company impacted in some way, but especially companies who've had to shift their supply chain and operations to account for new buying habits of companies and consumers. So then we saw the continued decline of brick and mortar stores and the move to e-commerce. But then we also saw state governments stepping in to provide economic relief in some states to help soften the blow of business. Next slide, please. Awesome, thank you. So from working in supply chain the last 8 years and watching the growth of e-commerce, these stats absolutely blow my mind. On Cyber Monday in 2020, there was $10.8 billion sold online, and it's expected to be one of the largest online shopping days in history. This is largely in part to 63% more people who are now doing their shopping online. I think of my mom as an example who loves Black Friday shopping, but nothing was getting her in the store this year. So all of her shopping, like Christmas shopping, was done online. All of her shopping for herself, she does everything online. So for these reasons and more, there was a 14% drop in brick and mortar retail. And then finally, like a really sad stat on here, sadly, like almost about 100,000 businesses closed as of August 2020. So although we're still seeing spending happening, those dollars are really being spent in an e-commerce environment versus the physical stores. Next slide, please. So what are the ramifications of this? With business closures and unemployment spikes, states are experiencing decreased revenue and then increased costs. So looking at this chart, Nevada, home of Las Vegas, the hub of in-person entertainment, is down a whopping 26%. California down 17%. Then you can see, New York and Texas 15%, Florida, like all of those larger states are seeing these huge, huge cuts. So, they did fare better than expected in 2020, but the expectation is over the next 2 years, deficits are likely to exceed over $500 billion. So states are going to be looking for ways to bridge these deficits, and one of the first places they'll be looking is at sales and use tax. So, next slide, please. Oh, so we just have a quick poll question here. So I'm sure like on the webinar, if you can see, we can answer there. So first one is just how has COVID-19 affected your business in 2020? So it looks like we have working remotely or temporarily closed, shifting to online, and has grown.
Are you seeing the answers as they come in on your
They did not come
section?
in.
Okay.
They have not.
Yeah, okay, we have, they're still coming in, but
Okay.
I'll give them a few more seconds before I give the percentages.
Exact.
No problem. Just give everyone a few more seconds. All right. So it looks like we have 73% say employees working remotely, 64% say their business has grown, 27% say their business is under restricted capacity, 18% say business shifting to online selling, and 9% saying business temporarily closed.
Okay. Yeah, and that sounds like very similar to what we've seen. It is really interesting, hearing all the businesses who have actually grown and thrived through COVID too. And yeah, definitely, like, I feel like almost everyone's working remotely these days. So thanks, Zach.
No problem.
Derek, do you want to go to the next slide? Awesome. Well, I will just pass it off to Derek here, who's going to walk through a few different ways that states may increase tax revenue in 2021.
Great. Thanks, Karen. And again, thanks to the Turnkey team for inviting us. Wanted to just really provide some additional information for folks that, may not have seen some of these impacts from the recent pandemic and some of the ongoing issues that we're seeing as we talk to more and more organizations who are looking to automate their tax compliance. The first thing we've seen in a lot of areas is that a lot of states, in an effort to, refill their coffers, are looking at new ways to tax additional types of products and services. You see in the upper right-hand corner, there was, Wyoming proposed to start taxing certain types of food and grocery items. That was actually voted down. But you can see the types of things that, again, states are saying, look, our revenue streams have been severely impacted. We've got to figure out ways to help bring this back about. And again, some of the ways that they've gone about that is really just to try and find other areas like digital services. That's kind of a new one, especially with all, everyone's doing Zoom calls and whatnot. Is there a way that they can actually start to tax some of those offerings to, again, kind of help refill their coffers that have been really decimated over the last, 12 months or so. We're also seeing that states are starting to really gear up and kind of key into folks who are remote sellers. For those of you that aren't familiar, the Wayfair Act was passed back in June of 2018, and that basically enabled states to start requiring remote sellers to collect sales tax. As of now, the majority of the states currently have economic nexus laws on the books, and we've seen states, I think it was Arizona and California, I saw in a piece of literature that they've actually doubled the number of auditors that they're going to start rolling out, kind of between, again, the market effects of the pandemic and, like we talked about, having less revenue coming into the state, but also now that we're about 2.5, going on 3 years removed from Wayfair, sort of what we're seeing is that a lot of states are kind of considering the grace period to be over, right? They're saying we need to now go find these folks who are not registered, make sure we get them registered, and again, approach them about any sort of historical liability from when they should have been registered until now. You know, as we've talked about, and we provide a lot of this information right on our website, you know, we're happy to work with you to help you better understand what your economic nexus footprint might be. But as you can tell, you know, every state does it a little bit differently, right? As you can see in North Dakota, they only care about taxable sales, whereas Kansas, you know, literally your first dollar into the state, they want you to get registered and start collecting. You know, other states have a little bit higher threshold, and you'll even see kind of towards the bottom of the slide, some states look at both revenue as well as the number of individual transactions. So there's a lot of complexity. This really is kind of the jumping off point for most organizations, is to understand, you know, where do we truly have responsibilities for collecting tax and filing? And again, as we talk to more and more customers, especially with, like Karen mentioned earlier, the advent of the e-commerce swing, more and more companies are finding that they do have exposure, right? They've got responsibilities to collect tax and file in a lot more states than they had previously thought, you know, well outside their geographic footprint. We're also seeing that marketplaces are really starting to be a source of complexity and also potential revenue streams for these states. Around 40 states now have marketplace facilitator laws on the books. So if any of you are working with, you know, folks like Amazon, right, the FBA sellers, while the marketplace facilitator laws exist, there's still a bit of a lagging effort from some of these organizations to truly automate and collect, you know, what they should be collecting. So, you know, even things, for example, if you have inventory stored in one of the distribution centers, again, if you're working with Amazon, that can be a nexus triggering activity. Again, any sales that mirror, you know, you're selling a certain amount through FBA, but you also have your own website. Again, you can trigger nexus based on your FBA sales and not realize it, and therefore have some exposure based on your own e-commerce sales. So this is an area that, again, is just adding some additional complexity. I think most folks nowadays, Karen kind of mentioned it earlier as well, everyone's pretty familiar with Amazon. I think most of us do a lot of our shopping there. And it really has added to some additional complexities, especially for any of you that might be working with those marketplaces to help distribute your goods and services. Consumer use tax is another area that we're really seeing additional scrutiny from the different states. This is an area that, you know, from what we've heard from auditors and other companies that we've worked with, as much as you're attempting to do this right, most auditors still find problems with respect to managing your consumer use tax. Again, just kind of a reminder that use tax is really, it's what's owed on a purchase when either the seller doesn't collect sales tax. So for example, maybe you make a purchase from a vendor who doesn't have nexus in your state, and therefore they're not collecting sales tax. You're still required to self-assess and report that use tax as part of your return. Some of the common triggers we see in this area, things like inventory transfers, you know, promotional giveaways. If you do any sort of centralized purchasing, you know, for example, Avalara, we're headquartered up here in Seattle, but we've got a large office over in Durham, North Carolina. You know, if we went out and purchased, let's say, some additional, you know, technology, some additional licenses for Zoom or some additional licenses for Salesforce or those types of things, and we purchase out of our Seattle location, they're going to charge us the Seattle sales tax. But if we're actually using those licenses over in our Durham office, the tax burden is a little bit lesser, right? So this allows us to basically say, you know, hey, we overpaid here in Washington. We're going to self-assess this on the use tax side and keep our books accurate so that when and if we do get audited, right, we've accounted for it. So this is an area that a lot of companies just really don't think about too much, but it's one that most auditors are really starting to dig into because they just assume that companies are doing this one incorrectly. So time for another quick poll. Zach, I'll go ahead and have you launch that for the audience. What's been the hardest part of managing sales tax for your business in 2020?
All right, let me launch that question really quick. Okay, let's give them a few seconds to answer. Have a few trickling in. We'll just give them a few more seconds. All right. Looks like that 55% say keeping up with changing sales tax laws. 27% saying determining where and when to register, and 18% managing consumer tax use tax.
Great. Thanks, Zach. And that's, again, kind of like we've talked about before. Those are some of the same things that we've been hearing from a lot of the folks we talk to. Again, in fact, we already, touched on a couple of those areas. Where and when do you have filing responsibilities, right? Have you triggered economic nexus through some of your sales activity? As we mentioned early on, there's a myriad of changes happening right now across the board. I saw a statistic not too long ago that I think it was like in the last 2 years, we've seen more changes to jurisdictions, rates, and just sort of overall sales tax changes than we had in the prior 20. Right, so I can certainly see where those would be challenges for a lot of the audience. And again, we look forward to working closely with folks to help you automate those areas. All right, so continuing on here, again, another impact that we've seen as part of the pandemic here is a lot of retailers have, as you might expect, started applying surcharges to cover certain pandemic-related costs. A lot of states are looking to see, can we tax these surcharges, right? Things like purchasing a PPE, takeout and handling fees. South Carolina, as you can see at the bottom, they've deemed that surcharges are subject to sales tax. So some of these ancillary areas that, again, businesses have had to put in place in order to respond to the downturn in economic conditions, again, states are sort of, rubbing their hands together saying, great, we might have an opportunity here to tax some of those fees and surcharges as a way to, again, kind of help make up some of the misses that we've had over the last, 12 months or so. Florida and Missouri, they've been a couple of holdouts. So far, they haven't enacted any economic nexus laws, but kind of along the lines of that poll question we just did, changing sales tax laws, even there, it looks like we'll start to, or at least have put bills in place to see if they can start collecting, again, remote sales tax via these economic nexus thresholds. And similar to what we showed you before, even with Florida and Missouri, they're already looking at it a little bit differently. In Florida, if that bill passes, marketplace facilitators, remote sellers, anytime they're over 200 transactions or $100,000 into the state, and it looks like that would take place that would take effect around July of this year. Missouri, again, they're looking more at just sort of a straight revenue threshold, $100,000 from TPP, digital goods and services, and if that bill is enacted, that'll take place on January 1st of next year. The other one that's been sort of an interesting area is this whole, work from home remote employees. I'm based up here in Seattle. I can tell you that as of Saturday, which is February 27th, it'll be 1 year of me working from home, right? So this is something that most companies are facing, at least in some part. I'm very envious of those of you that still get to go into your office. I would actually love to be able to go into my office once in a while. But again, this is kind of the new way that a lot of organizations are going to be moving forward into the new world, which is, having people set up shop in different places, working from their home location, obviously using things like GoToWebinar, Zoom, Teams, etc. And again, several states are sort of looking at that to see if that's something that could also be a nexus triggering activity. Right. So again, this is something that we're watching closely, and we anticipate there will be some changes over the coming, in months ahead, as far as how companies treat, remote employees. So that could be another potential nexus trigger, which again goes back to our earlier poll question about, it's already complicated enough to know where and when we have to register. This just adds another layer of complexity. So we'll talk a little bit about some of the other noteworthy sales tax changes we've seen. Again, this is certainly not an exhaustive list, but really just designed to kind of give you some ideas of some of the more prominent areas that we're seeing changes take place. Things like local sales tax, right? As many people are probably aware, Alaska as a state doesn't have a general sales tax, but depending on which city, you may have a local sales tax you have to deal with, right? If you think the cruise industry, which again, right now is obviously in a bit of a downturn, but some of those ports of call where the cruise ships stop, those oftentimes have their own local sales tax that you need to be aware of and make sure that you're collecting and remitting back to it, even though the overall state itself, doesn't have a general sales tax. Again, Karen mentioned earlier, there is some tax relief, right? Some of the states are trying to help their businesses in their state respond to these same types of economic impacts. Things like, legalizing and taxing, marijuana as an example. I think over half the states now across the country have laws on the books where, some form of recreational marijuana is legalized. Same thing with cigarette, tobacco, vaping taxes. These are things that, At least up here in Seattle, those services were deemed as essential. They stayed open the entire time. Well, once again, the state's going to want to figure out ways that they can, tap into some of that revenue stream to, once again, kind of help them respond to the pandemic. Digital goods and services. This is another area that's been a little bit nebulous in the last few years. Again, it's sometimes challenging to know that, okay, if we're advertising in a certain location, if we're streaming services. I'm working with an organization now that they do like online concerts, right? So again, all those streaming locations where those folks are located, depending on the state, some of those may become taxable, sales, right? Where they now have to start figuring out based on where people are located, the amount that they're streaming, is that something that's actually going to trigger Nexus? So once again, these are all the types of things that we're seeing constantly moving around. Again, each state unfortunately happens to do things pretty independently. So while, certain states may decide that, hey, we're not going to tax these digital services for now, other states might become a little bit more aggressive and decide that they are going to start taxing streaming services, saying that they should be paying to use, those services in their state. With respect to the value-added tax, I don't know how many of you on the line are, international sellers. We do have capabilities in some of these areas. I'm going to be honest, this isn't my area of expertise, but we can certainly dig into those areas. But again, even with things like Brexit as of late, right, we're seeing that a lot of the way that that VAT is calculated, that it's being required to be remitted, is changing. And again, this is something that over time, sort of the overarching argument is, none of this is going to get less complex, right? And I think that's something that everyone can really appreciate and agree to. If anything, it's only going to get more complicated. And that's really why it's important for folks, in our opinion anyways, is to at least look at some of those areas of your own compliance, find out if there are areas that you can offload to technology, right? Kind of the whole point of technology is it should either make you money, save you money, or reduce your risk, right? And in our case, I think we can help with a couple of those buckets. Just kind of focused on a few of the specific industries. I think Karen talked a lot about, e-commerce, but I think everyone can probably appreciate, even if you look at your own buying behavior, right, whereas you used to might go down to the store, pick up groceries, now lots of folks are doing the curbside pickup, right, or they may be even doing full-on delivery. I know a lot of the grocery store chains out here will actually deliver right to your door. Using apps like Uber Eats and those types of things, really just buying everything online instead of, having to don a mask and risk the crowds. People are buying things that they need right off of Amazon and having that delivered, within a day or two. So we're really seeing this huge shift of purchasing and spending into the online and e-commerce world, and we're finding that most organizations, even if you're selling B2B, there's typically an opportunity for you to streamline your sales and make that more efficient and improve that buyer experience for your customers as well, right? So again, there's lots of things that we're seeing that are really kind of pushing this towards the e-commerce world. It'll be interesting to see, over time if that holds. I think there's going to be a little bit of an interest for for purchasers to, when vaccines roll out and the pandemic's in the rearview mirror, to get back to in-person activities. But I also think that behaviors are at that point going to be fairly well established. That's going to continue to have folks, purchasing through the e-commerce channels on a go-forward basis. And then even from a manufacturing standpoint, again, as we talked about before with Economic Nexus, not all states include exempt sales and services, but we're seeing more and more that do. Again, they want to know how much revenue is coming into their state. So regardless of whether you're purchasing materials, manufacturing products, collecting reseller certificates and, not charging sales tax, that absolutely can still be a trigger for Economic Nexus, depending on the state that you're working in. We're seeing a lot of manufacturers shift, right? As you can see here, I think the common ones, clothing manufacturers are starting to produce things like masks and protective equipment. I know at least out here in the Seattle area, a lot of the, the local distilleries, pivoted towards, making things like hand sanitizer, right? I mean, something that all of a sudden the entire world was out of. So once again, these can all be with new product lines, with new offerings. It's always a good opportunity and a good time to go ahead and take another look and see, do any of these things that we've done to, pivot and adjust to the new economic conditions we're in, are those triggers that have established nexus for us in any individual states? And if so, are we exposed because we are maybe not collecting sales tax in some of those arenas? So time for another poll question. I'll let Zach go ahead and put that up on the screen. But the question is, what business impacts of COVID-19 are you most concerned about?
few more seconds. Okay. So it looks like we are at 42% decreased revenue and profit, 42% supply chain disruptions, 17% loss of employee productivity, 17% staffing changes, and 8% cost containment.
Great, great. Yeah, and again, these are all really mirroring a lot of what we're seeing with folks that we talk to on a day-to-day basis as well. Yeah, I think you're hard-pressed to find, a lot of businesses that have actually seen an increase in revenue. Obviously, it depends on the industry you're in and the types of products and services you sell. But absolutely, leaner organizations, right, staffing adjustments, having to do more with less. These are all, again, kind of the whole benefit of technology, right? Enable technology to take over some of these areas that, again, that you guys are concerned with based on some of the factors that you've had to respond to. So just kind of a look forward as far as, what we're seeing from a technology and sales tax perspective on a go-forward basis. There are some programs out there designed to help you. Some of the things, I don't know if anyone has ever done any research, but there's a program called the Streamlined Sales Tax Program. At a high level, what this does is it basically streamlines the requirements, things like unified forms, unified certificates for exemptions, standardized definitions on things like product taxability. Avalara is a certified provider of this program, okay? And what that means to you, as you can see on the screen, is in any of these 24 states, basically if you don't have a physical presence, right? No office, no employees, no inventory, no warehouses, things like that, you'll probably qualify for this SST program. What it does is it basically, you get to use Avalara for your rate calculations, managing your exempt customers, filing of all your returns. The states are actually going to pay us for you to use Avalara in those instances. What I think is another really nice benefit is because of that trade-off, if you ever do get audited in one of those states, they actually come to us first. So any notices, any letters from the states, you actually just upload that to Avalara. We're going to go ahead and work those through to completion for you. One of the other kind of sidebar benefits I always like to mention about this program is this is something that we have to get recertified for every year. So in a sense, as you look at this, 24 of these states have actually vetted Avalara and said, yep, we give them our sign of approval or our stamp of approval. We know they do it correctly. We've actually heard anecdotally from a few different companies, I've heard this a few times over, that, they did get audited. Auditor found out they were using Avalara and kind of looked at them and joked and said, all right, we probably won't be seeing you guys again. All right, so these are some of the programs that are really put in place to help you guys make sense of it and achieve that level of compliance through a much easier mechanism. Again, as you can see here, we talked about some of this before. The Streamlined Sales Tax Program is actually limited to 24 states, but more and more states are starting to kind of look at ways that they can essentially piggyback off that program. I know Pennsylvania is doing some kind of their own CSP program that, again, is essentially mirrored off the SST and provides a lot of those same benefits. Again, Missouri looks like they're going to go ahead, once they get Economic Nexus on the books, they're going to go ahead and look to try and participate in this program as well. So once again, this is something that we always explore with all of the companies we talk to. Kind of first step is, where do you think you have Nexus, right? Let's do a quick analysis and see if we can find that out. And then, after we understand which states you might need to register and file in, let's look into the programs that are going to help reduce the costs and improve your level of compliance through things like the Streamlined Sales Tax Program that you see here. We're also seeing, again, obviously, technology. I think everyone follows this probably. Technology is shifting at a faster pace now than it ever has in the past. We're leveraging a lot of these types of changes on the back end. I'm not a technology guy per se, so I'm not going to get into the weeds here as far as all the ins and outs, but we're more than happy to kind of walk you through what we're doing on the back end to make this a much more efficient process. Just to give some of you an idea, when we calculate rates based on an invoice, we're doing it in like 0.16 milliseconds, right? Our technology is constantly learning. We have a team of folks on our content team. I think it's around 75 people, something like that, that are constantly making updates and changes to rates and those kinds of things. So again, Avalara is built in the cloud. We were founded in the cloud. That's where we started. Majority of our investment goes into innovation that, again, customers don't even know they need right now, but 2, 3, 4, 5 years down the road, these are things that you guys will absolutely benefit from. And that's where we're continually striving to innovate our technology such that, we're always a step ahead of the curve as it relates to sales tax compliance. So this is just kind of an overview of our compliance suite. Again, I won't go into details on each of these areas. We'd certainly invite you to, reach out to Zach, or our contact information will be on the screen here towards the end of the webinar. We'd love to explore this with you. I talk with a lot of companies pretty informally at first, just, learn about your business, find out what areas are priorities for you, and see if there's other areas of exposure that we might be able to assist with. Everyone knows us pretty well for calculations, right? That's what most people think of when they think of sales tax. We file a lot of returns for companies as well. We can help with your your compliance document management, things like exemption certificates from resellers, helping you understand when and where they expire, making sure you don't have any exposure there, all the way through to things like, on the registration side, helping companies get registered. We have payments. Again, with our returns, we actually can automate not only the filing of the returns, but that includes the remittance back to those jurisdictions, and even things like insights, right? We recently acquired a company called TTR, for those special scenarios, kind of the in-depth tax research where you need to get a yes-no answer from a tax professional. These are all areas that kind of add to our platform and our total compliance suite. So, most organizations that we talk to, there's something that is probably broken, or they at least assume that they could automate and streamline that process a little bit. Again, we'd love to explore any of those areas with you to see, what we can do to help you automate and, kind of put that on the back burner. So once again, just a couple of areas that we try and help companies stay abreast of all these changes. I know it's a lot of information to digest. We try and assimilate this and put it in as easy to consume areas as possible on our website. We've got information around, COVID-19, just to help you better understand, how states are responding, any types of changes that, the products, et cetera, that might be applicable. Obviously, things like sales tax nexus, right? We have a full listing of every state right on our website that explains what their thresholds are, whether or not exempt sales are included, when their laws went on the books, those types of things. And again, we really try and provide a lot of education to the market, helping people better understand kind of what their current scenario is and what the future might hold, right? I mean, that's a common question we ask folks is, look, if you can wave a magic wand, what would this look like for you, right? And more often than not, we can help make that happen. So again, I wanted to make sure we opened up and left plenty of time for some questions here. I think, Zach, correct me if I'm wrong, but there's potentially some questions that were put into the chat window, or I don't know if we're going to unmute and have people ask some questions, but I'll go ahead and turn it over to you.
Yeah, if anyone has any questions, there is a chat function in our webinar functionality, so just go ahead and enter those there, and I will read them off to the Avalara team, and we'll get those answers to you. So we'll give everyone a few seconds to ask their questions. All right, I do have one here. How is SST eligibility determined?
Yeah, it's a good question. At a real high level, just think economic nexus, right? So the sort of the specific parameters for the volunteer status for SST, you can't have more than $50,000 in payroll. Again, you can't have more than, I think, 25% of your revenue tied to payroll or office location. It's essentially it's physical presence, right? If you have nexus in one of those 24 states and you've only triggered based off of economic conditions, right? It's not due to a remote employee. It's not due to, again, a warehouse or inventory. You don't have an office in that state. More often than not, you will qualify as a volunteer remitter for the SST program. And again, there are still benefits even if you don't qualify for volunteer remitter, even things like free registration, right? Whether you're voluntary or not, so whether you meet those criteria as part of an SST state, you can still get things like free registration. Those additional benefits are really geared towards, like I mentioned, those companies that really have only triggered based on economic nexus. They're just selling into the state, but they have no other physical presence. Those are really the ones that can maximize the benefits of that program.
All right, we have another one here. What states have you seen that are being more aggressive and going after businesses?
Yeah, it's a good question. The one I hear all the time is Wisconsin. I feel like 7 out of every 10 people I talk to have gotten a letter from Wisconsin. We've sort of seen it tends to be sort of the ones around the coastlines, right? California, Texas, kind of down through the southeast. Again, Wisconsin, Ohio seems to be particularly aggressive. Kansas is kind of an interesting one. Again, they don't even have a small seller exception. They literally want you to get registered on your first dollar coming into the state. So it really just kind of depends. More and more states, like I said, I think I mentioned this earlier. I saw a note that California and Arizona, I think they doubled the number of auditors that they had on staff. So the way we kind of see it is I think we're sort of in this gearing up position for a lot of these states, right, where they're starting to ramp up. They don't want to come across too strongly right now because of all the impacts of COVID, but they also understand that something has to happen here before too long. And again, those are the ones that I've seen a little bit more commonly as again, Texas, Wisconsin, Ohio, California, New York sometimes can get there as well as far as being a little bit more aggressive with coming after companies.
I had no idea the Badgers were so aggressive.
Wisconsin seems to be the number one I hear. I don't know why that is, but they seem to be extremely aggressive on remote seller audits.
And then I have another one here. If someone buys an item in Atlanta, Georgia, and the office is in Atlanta, but the item is shipped to Florida, is there sales tax liability for the customer?
See, so if I understand that correctly, so in general, let me kind of approach this a little bit more roundabout way. In general, it's based on the ship-to address. And if I understood the question correctly, if you're the seller and you're shipping to Atlanta, even if it's, well, again, my understanding is if you're shipping to Atlanta, that's where the sales tax would be calculated. If the buyer then turns around and says, actually, we're going to use this over here in Florida, that may constitute a use tax obligation, right? And so that's kind of what we talked about before. The seller has every intent to do this correctly, has Nexus, and charges the appropriate rate. That actually sounds kind of like my example earlier about, software licenses. But if ultimately that's being used in Florida, the company that's the buyer would probably want to self-assess and either, depending on the rate, if it's higher or lower, either get a credit back for the sales tax they paid in Georgia, and then self-assess from a use tax perspective within Florida. But I don't know for sure if I got the question right.
Yeah,
That answer your question?
I think you did. Yeah, the question was
Okay.
if they buy an item in Atlanta and then it's shipped to Florida. So
yeah, if the ship to is Florida, then you would typically calculate sales tax based on the ship to. Now, Florida, as of now, doesn't have any economic nexus laws on the books. That's one that they may in the coming years. So again, we'd want to get into specifics of that scenario. But if they do not have economic nexus laws on the books, I don't think you would have an obligation to collect sales tax. But again, I'm not a tax attorney, right? This is just, we'd probably want to dig into that scenario a little bit further because it could be one of two answers.
all right, got it. Are any shipping charges taxed, or are shipping charges taxed?
In some states, yes. And actually shipping, freight, common carrier, all those can actually be treated a little bit differently depending on the state you're in. Drop shipment is another one that can be somewhat complicated based on, again, everyone's scenario. So, these are the types of things like we always talk about. Unfortunately, every state looks at things a little bit differently. Just like software as a service technology. Some states tax it, some don't, some partially tax it. It's kind of the same concept with, freight, shipping, et cetera, is some states are going to require that you do charge tax on those areas. Some states are not going to. Sometimes those fees will be included as part of the economic nexus threshold. Sometimes they won't. It really depends on each individual state. And, like I said, these are the types of things that we usually help companies as kind of a jumping off point is to try and understand, based on your sales, where do you have nexus and where should we dig into the details to find out. Now, one of the nice things is our content engine, right? So within AvaTax, we already know all the rules that each state has as it relates to those areas. So the beauty here is once you come on board and say, okay, we've got, common carrier, we deal with UPS, FedEx, et cetera. Maybe we have our own delivery trucks for local delivery, stuff like that. Once you've mapped those to our tax codes, we know how every state or every jurisdiction will handle those, and that's what enables us to get accurate, rate calculations. So if a state does tax it, we'll pick it up. If they partially tax it, we'll pick up the partial. I know there's an example in Florida. They have this surtax charge where it's like a certain amount. I think it's up to a certain dollar amount based on the invoice or something. All those types of things we can help pick up, but it does vary based on each individual state.
Got it. Then I have another one here. Not sure if it's what you've spoken to already, but the question is, where can I learn more about qualifying customers for SST, i.e. seller in South Carolina wants to be exempt for a Georgia shipment?
So seller in South Carolina, yeah, so it sounds like there's maybe a couple different questions in there, and this might be one where, again, we can set up a call and dig into your area. As far as the SST goes, which I believe was the first part of the question, in this case, I would just say use our good friend Google. Type in Avalara SST into Google, and you'll find a page on our website that basically breaks down exactly what the program is. Talks about the requirements, tells you which states are part of SST, so it's got a nice little FAQ. So that's a good one to just kind of understand the overall program and where that might apply. The second part of the question sounded like it had more to do with, determining whether or not to accept a resale certificate or some form of an exemption certificate for that individual purchaser. We do have technology through our what we call Cert Capture, which is our platform for managing your exempt buyers, that'll basically help you understand for each individual state what types of forms are required or acceptable as certificates to not have to pay sales tax, right? And that's really the way the states all look at it, is they want you to collect sales tax unless you have a reason not to. And in most cases, the reason not to, right, the old get out of jail free card, is you collect an exemption certificate. They don't have maybe as much variability as rates and jurisdictions, but there is still quite a bit. I mean, just as an example, I think Florida, for a resale certificate, I believe those expire every year on the calendar year, whereas the manufacturing certificate, I believe, has like a 5-year expiration. So even being able to understand, based on where the customer is located, you're supposed to have a certificate for each of the states that you're shipping product to. So it could be very much a scenario where a company has, certificates for, Florida, Missouri, Arkansas, and North Carolina, but they don't have one for Georgia or South Carolina. You guys would then be exposed and would need to either collect a certificate or collect tax on those sales.
Okay, and a couple more here. Do you recommend requesting a sales tax exempt certificate each year for those that are resale?
I mean, as a best practice, I don't think it ever hurts. We actually get sort of a slant to that question. Even if you don't have Nexus in a certain state, as a best practice, we always recommend you collect them, especially if the organization is willing to provide them to you. Again, if you're using our Cert Capture tool, we'll help you know whether or not you need one. So part of our platform actually knows the expirations for the different types of certificates in each state. But again, just as a best practice, it's always better to have that coverage, right? It's kind of your CYA. So, they said, hey, we don't pay sales tax. Here's our certificate. I would absolutely recommend that, yes, you accept that, put it on file, so that when and if you ever do get audited, right, auditors don't usually come in and say, hey, let me look at your books from last month. They pick a point 3 years ago and say, show me all your sales, show me the ones that you collected sales tax on, and for all these that you listed as exempt, I need to see your documentation that proves that you had a valid certificate for that period of time, right? And so that's why we say, even in a growth environment, you may not be triggering Nexus in all 50 states yet, but it's much harder, at least from what we've seen, once you do trigger Nexus, to have to go back and try and, collect all those in arrears, right, versus just getting them at the time you bring on new customers. So again, as a best practice, we always recommend, especially for new customers, collect the resale certificate if they have one. Not all states, they expire every year, right? Again, that's just part of the complexity. Florida it does, but other states, they don't, or it might be a longer window. But most of the time with compliance, having too much documentation is a better problem than not having enough documentation.
All right, and it looks like we have one more question here. Just let me pull it up. Okay, and the last one is, should you use quote bill to unquote or quote ship to
Ship to.
unquote for determining economic nexus?
Typically it's ship to. Yeah. More often
Okay.
than not, you want to use ship to as your analysis point. Again, this is things we can help with. There are some what they call hybrid sourcing states. So like, for example, if you're in California, shipping to California, I think that one might be origin-based versus destination. But again, it's more often than not, yeah, look at your ship to. Use that as your way. And again, it's real easy for us. You can send us a couple data points, right? Gross receipts broken out by state, and then number of individual transactions broken out by state. And then we can kind of layer it against those economic nexus thresholds to give you an idea of, here's your short list, right? Here's 20 states that you may have triggered nexus in. Let's do a deeper dive into those to find out, whether or not you truly have nexus. So that's one option, again, that I offer to everyone I talk to. We also have formal nexus studies. A lot of you may have, accounting partners that you work with, and, they have their own nexus studies as well. But depending on your level of need and how complicated your scenario is, if you have a lot of office locations, if you have a lot of remote employees, if you work with, contractors on your behalf, those kinds of things can all potentially trigger nexus. So again, we have a couple different ways to look at that and help you better understand what your true footprint is.
All right, I think that covers all the questions we got in the chat.
Okay, great. Well, again, I really appreciate the opportunity to speak with you folks. I'll go ahead and turn it back over to Zach to close this up. But, once again, my contact information is on the screen. If you have any questions whatsoever, feel free to reach out to the team at Turnkey. They know how to find me, or just shoot me an email direct to my email address you see on the screen. We'd love to set up, just an informal exploratory call to learn more about your scenario.
All right, thanks, Derek. As Derek said, yes, if you have any questions, please reach out to the Avalara team. Otherwise, you feel free to reach out to the Turnkey team at info@turnkeytech.com. Just so everyone knows, if you attended today, you will receive a follow-up email that has this recorded webinar attached. And also, since everyone attended today, you will also gain a Starbucks gift card. So we will be sending out that information to you within the next couple of business days. So once again, if you have any questions, just reach out to info@turnkeytech.com or our team at Avalara. And once you receive the follow-up email with the webinar recording and our follow-up questions, if you have anything you want to discuss with us, just please reach out to either of our teams and we will follow up with you. Thanks everyone for joining us today. Bye.